Good afternoon, everybody. Thanks for joining us for this event. I'm very excited about it and talk about timely and topical as we've just experienced Bitcoin hitting an all-time high yesterday. Didn't last long, did it? That's what we're going to talk about today, what you need to know about the new spot Bitcoin ETFs, because as we all know, that's the driver to what's been propelling Bitcoin out of its crypto winter and into the new all-time high. And to help us engage in this conversation, nobody better than my good friend Matt Hougan, who is the Chief Investment Officer of Bitwise Asset Management. Matt, good to be with you.
Glad to be here, Rick. Thanks for having me.
It's a good thing Matt likes me because this is the second event we've done in 2 days. Yesterday we were getting all excited that Bitcoin was about to hit its all-time high. And now here it has gone and done that, however briefly, I might add. Why do you suppose it retracted so quickly from its all-time high?
Yeah, it's a great question. We did just touch the all-time high over 69,000 and then pulled way back multiple thousands of dollars. You and I were joking about it before the webinar. It's all the people who bought it 3 years ago and are now just happy to get out even. But look, I think this is a pause that refreshes. I think Bitcoin is going substantially higher. Right now, there is just too much demand, not enough new supply. The market is imbalanced. We've invited $100 trillion of assets into the Bitcoin market for the first time. And we're going through a period of price discovery where we see where that $100 trillion of assets values Bitcoin. And I think the answer is significantly higher than we are today. So yeah, a little pullback. It's the pause that refreshes, but I wouldn't worry about it, Rick.
And it's a reminder to everybody that Bitcoin is a volatile asset. So nothing like that reminder at the very time we're doing this webinar. Just for those who don't know, Matt, he is the CIO of Bitwise Asset Management, and Matt has a long history in the ETF world. He was the CTO of ETFs.com and ran the Inside ETFs conference with our president, Don Friedman. 20-year plus career. You wrote the CFA Institute's Guide to Crypto, and it's your record is huge, and that's why we're having you here today. Talk about Bitwise investments as well. Obviously, one of the new sponsors of the new spot Bitcoin ETFs, but tell us more about Bitwise.
Yeah, absolutely. Yeah, I wrote the CFA's Guide to Crypto, and 7 years ago, before that, wrote the CFA's Guide to ETFs. So this moment with ETFs and crypto is the trajectory of my career. Bitwise is a specialist crypto asset manager. We've been in this market helping professional investors, mostly financial advisors and family offices, access crypto since 2017. So we're one of the largest and longest running crypto asset managers in the US. We created the first and today run the largest crypto index fund in the world, the Bitwise 10 Crypto Index Fund. And we're proud to have launched one of the largest spot Bitcoin ETFs, BITB, which today I think has north of $2 billion or is right on that doorstep. So we've been doing this for a few years. We exist to help exactly the people on this webinar, which are financial advisors, access the opportunities in crypto. We're extremely proud of our track record. And, we're going to be doing this for the next 10 years and beyond. It's why we exist.
And we have an awful lot to share with you on today's webinar. As we engage in this conversation, we invite you to participate in the Zoom link here. You've got at the bottom of your screen or somewhere is your opportunity to enter Q&A. So feel free to do that. I will be monitoring that as we continue our conversation and peppering in your questions into our dialogue. Many of you sent in questions in advance of today's webinar, and I will infuse those with Matt. They will largely guide our conversation today so that we're tackling the subjects that matter the most to you. But this is a really super timely conversation. So I want to begin right there, Matt. It's been just under 2 months since the launch of the spot Bitcoin ETFs. We have been working toward this for 10 years and finally got it. So talk about what's happened since the launch of these ETFs.
Yeah, we found out it was worth the wait. That's what's happened. That's right. We took 10 years to launch these ETFs, but they have been the most successful ETF launches of all time. And let's put that in context. Since ETFs were created in the US in 1993, we've seen more than 5,300 ETFs launch. And if you look at 1 month flows or 2 year flows, or you can even project out to a year and beyond, spot Bitcoin ETFs are the most successful launches of all time. They pulled in north of $8 billion of assets. The number may be higher than that. I've stopped even looking on a day-to-day basis. To put that in context again, the fastest growing ETF to launch before these ETFs was the NASDAQ 100 Qs, which pulled in $5 billion of assets in their first year on the market. These Bitcoin ETFs have done that and more in just the first 2 months. And I think there's reason to believe that flows may accelerate in Q2 and Q3 and beyond. So this is a historic success. Investors love these ETFs. They're functioning extremely well in the market, trading tight, low expenses. I think it's been a win. I think it's transforming the Bitcoin market. And I still think it has a lot of room to run in terms of growth of these ETFs and acceptance of these ETFs by traditional investors.
Yeah, I think you're absolutely right about that. As exciting as it is, we're between 10 and 20 billion dollars of assets have flowed into these ETFs in just 2 months, setting all kinds of records in the ETF industry. I think we're just getting started. I've been long on record of saying that I'm expecting independent advisors alone. Forget about wirehouses, forget about family offices, forget about retail or institutional investors. Just the independent RIA channel is going to put in 150 billion into these ETFs over the next 2 years. We're at total assets of between 10 and 20 billion. So we're just getting started. And is that flow of asset, Matt, the direct catalyst of Bitcoin's price increase? Is it really as simple as that, supply and demand?
Sometimes it's nice to keep investing simple, Rick. I think it is supply and demand. I mean, if you look at these ETFs on any given day, they may be purchasing more than 10,000 Bitcoin out of the market. And at the same time, Bitcoin miners are only producing roughly 900 Bitcoin. So you have days when the net new supply is being met by 10x the demand. And the only solution to that is the price has to go up until long-term holders agree to sell. Now, we don't know, we can't say for sure how long that demand will persist. And of course, as you get to these price levels, you do see long-term holders sell. I think we saw some of it today, right? We
Right.
got to a psychological barrier, which is a new all-time high, and that shook loose some Bitcoin ETF from long-term investors. I think you could imagine there's another psychological barrier if we get to something like $100,000 Bitcoin. But yeah, it's supply and demand. Right now, there is more demand than there is net new supply. And of course, there are other factors, but that's what's driving the price of Bitcoin right now.
What would you say is the overall investor sentiment or attitude about Bitcoin? And I don't mean euphoria of those engaged because the price has skyrocketed 50+% so far this year, but just the fundamental attitude about Bitcoin. Is the presence of these ETFs causing a shift in people's attitudes?
Absolutely. We're going from a niche alternative asset into a mainstream asset. We're going to an asset that when you say Bitcoin, 5 years ago, they thought of hoodies and cypherpunks, and today they think of Larry Fink and people wearing suits. It is a transformation. It's going to be reflective in a changing dynamic of how the asset performs. But I think the best way to describe it is we're going from the niche to the mainstream. You see this in technology all the time. There's this idea that technologies are first adopted by a group of early adopters and technologists, and then they cross the chasm into the mainstream, right? The internet was used by technology experts, and now everyone uses the internet. And what's happening with Bitcoin is for the first 15 years, it was only really used by early adopters, technologists, cypherpunks, computer scientists, and a few sort of renegades. And now we've crossed the chasm into the mainstream, and you're seeing it enter, BlackRock's strategic investment income portfolio. You're seeing it enter, corporate balance sheets and pension funds. It's going mainstream.
The I think the reaction from a lot of the crypto community isn't favorable to that. They liked their little party all by themselves, and the fact that mainstream investors, that the financial services machine is engaging in this, does this represent a fundamental, the end of a chapter and the start of a new one in the evolution of crypto and Bitcoin particularly?
I think that it does to an element, and we all liked it when we saw Radiohead in a small bar and no one else knew about them, and that made us cool. And then we lament that when they go big, right? That is sort of a classic response. But the reason I think it's really great is if you actually fundamentally believe in Bitcoin, by which I mean you think it will matter as a digital store of asset, that it will matter as a potential tool for international transactions, that blockchain will reshape how the financial industry works. You need to go through this process. You can't achieve those goals of sort of significantly impacting how the world works and how finance works and making finance better if you're a niche asset that's ignored by the mainstream, right? You have to move into the mainstream in order to have that large effect. So there are elements of the Bitcoin community who look down on ETFs or find it ironic that we're taking this self-sovereign asset and packaging it in a traditional vehicle. But that's part of its natural growth. It's part of what it has to go through if it's going to achieve, real world impact, which many people think it will.
You could argue that the existence of these ETFs represents an endorsement, a stamp of approval, legitimization to the asset class. Gary Gensler would be the first to say, as chair of the SEC, that the SEC approval of the ETFs does not convey approval. It's simply allowing the product to exist on the market because it has met regulatory requirements. Larry Fink could argue, as the CEO of BlackRock, that he isn't necessarily endorsing Bitcoin as an investment. He's simply acknowledging there's investor demand, and his job is to provide access to investments on behalf of his investors and clients. And yet, at the same time, a lot of people, let's admit it, have been sitting on the sidelines because without the ETF, there was no easy, convenient, familiar way to access it. And since it was just a bunch of those crypto bros in a bar enjoying Radiohead by themselves, nowadays you do have the SEC saying yes to a product that is mainstream, an ETF wrapper, which is the most popular investment vehicle in the country, with CEOs like Larry Fink saying that he thinks this is going to transform global finance on an unprecedented scale. That does make it easier for people to say, okay, I guess it's safe to put a toe in the water, right?
I think that's right. I think it makes it easier for people to say that. I think it makes it easier for people to access it. They don't have to download an app from an entity that they don't know. They can buy it in their brokerage account the way they would buy SPY or IVV or GLD. And at the same time, it's absolutely the case that these ETFs are creating arguably the strongest, most secure stack of assurances of any way to access Bitcoin in the past. People have been uncomfortable accessing Bitcoin because they're worried they might lose their password, or they don't know how it's custodied, or they have to work with an offshore unregulated exchange. These are ETFs that exist under federal securities law. They use third-party custodians that are all regulated as state trust chartered entities, have extensive regulation. They have auditors. BitB, our ETF, is audited by KPMG, one of the largest auditors in the world. It's the administrator is the Bank of New York. These are a wonderful stack of regulatory protection. So not only is it easier and more familiar, we've added these assurances that have helped people feel more comfortable and, in fact, be more comfortable allocating to the space. So it is a real material advance as well as a psychological advance. And I think the two working together is transformative.
Yeah, I think that there are always two huge risks in Bitcoin. One is my Bitcoin going to be worthless one day, but second is the platform I'm using to buy it going to turn out to be a fraud. And we've seen too many of those frauds throughout Bitcoin's history. these ETFs don't eliminate the market risk. Who knows what the price of Bitcoin will be one day? But at least I think we can all feel comfortable it eliminates the fraud risk. There are too many safeguards, protections, regulatory oversight, et cetera. And now I can just focus on the investment risk like I do in the stock market. And that is a first time for Bitcoin. We've never had that before.
That's right. And that's transformative, right? You can just focus on the investment risk. Accessing it is easy. And I think investors understand that they can handle the investment risk by sizing their portfolio appropriately, right? You and I have talked about this. You invest a small amount for your portfolio, that's all that you can lose. People can get their hands around that. But we've solved this other problem, which has dogged Bitcoin throughout its existence. And there are a large number of blowups, including in recent memory, where investors have lost money. Now they have all these assurances stacked on top of one another in these convenient packages, which are also among the lowest cost ways we've ever had to access Bitcoin in history, right? 20 basis points for our ETF with KPMG, with Bank of New York Mellon, with a regulated custodian. It's almost the best of both worlds, extreme low fees and enhanced security and ease. It's a nice package.
The SEC did everybody a favor by saying yes to these ETFs and did something very different compared to when it approved the GLD ETF 20 some years ago. When that gold ETF came onto the market, that was it, a single gold ETF. And so billions of dollars flooded into it almost immediately, because if you wanted gold in an ETF, that was the only game in town. The SEC didn't do that this time. They this time approved 10 of these ETFs all on the same day. So great. Everybody's happy that we now have competition, and competition's good for the economy. It's good for the consumer and the investor. It forces everybody to put their best foot forward in product offerings, but it raises a piece of complication as an investor, as an investment advisor. If there's only one GLD, it's a no-brainer. If I want gold, I'll buy it. But if I want a Bitcoin ETF, oh my goodness, there's 10 of you guys. Mm-hmm. How do I pick between them? How do I choose between these competing ETFs?
Yeah, you just choose Bitwise's, Rick. Come on.
I will let you make a pitch for Bitwise and BITB. But give me an ETF answer to that
I'm
question.
joking, of course. This is my heritage, right? I built the first ETF ratings and analytics system. So I think there is a familiar framework for evaluating these ETFs, which is very similar to how we evaluate other ETFs. You start with the fee. The less you pay, the more you keep. And there are wide ranges of fees. There's an ETF that charges a 1.5% fee, and BITB charges 20 basis points. That's a big gap. Even between BITB and some of our larger competitors, we're 20% cheaper than BlackRock, 20% cheaper than Fidelity. So fees are one place to look. The next thing you do with any ETF, again, not Bitcoin ETFs, but any ETFs, is look at the liquidity. The good story there is that there are a handful of these ETFs that trade $100 million a day at penny-wide spreads, and you have great liquidity in these products. So fees and liquidity. And then we would look at, is the issuer a specialist in crypto? This one is important for financial advisors, because if you're an advisor and you're allocating to one of these ETFs today, great. What happens a month from now, 3 months from now, 6 months from now, when Janet Yellen has a press conference that says something, or Elizabeth Warren introduces a bill, or there's a development on with the core developers of Bitcoin? How do you understand what's going on and communicate that to clients? And so we find many investors want to find a specialist. But I think that's sort of the 1, 2, 3: fees, liquidity, and crypto expertise. And different people will choose different ETFs, but we've been pleased that many have found their way to Bitwise.
Well, I have to give Bitwise a shout out here, because I think it's noteworthy to point out the incredible amount of asset flow that you've received out of this competition of 10. I mean, let's face it, I think you're the smallest of the asset managers. I mean, you're up against BlackRock, Fidelity, Invesco, Franklin Templeton. These are trillion-dollar asset managers. BlackRock, of course, the world's biggest at, what is it now, 10 trillion. Mm-hmm. And yet you are the third largest Bitcoin ETF sponsor in terms of asset flows. Investment advisors are recognizing the benefits you just cited, the deep history that you've got. You're the oldest crypto-only asset manager in the country, 7 years old. You've got an array of products, 18 of them, I think. Other companies have one. They've got the ETF. That's it. So for them, it's a land grab, but for you, it's part of who you are. And I think that the asset flows you're receiving clearly reflect the fact that Bitwise has done a good job at making the story known among the investment community, and you're seeing the rewards of that by the strong flows you've gotten. So congratulations.
Well, I appreciate that. And I appreciate all the investors who have chosen BITB.
I need to make a little bit of a speech here. You were very polite in not mentioning this fund company's name because that's your nature, Matt. But I'm not as polite as you, and I'm going to be a little more bold and blunt. If you wish to add on to what I'm about to say, I have a feeling you'll just nod your head and say nothing, knowing you. But maybe I'll omit a fact that you might feel of value. You talked about the incredible spreads of these ETFs, that they range from 19 basis points. You're at 20. I personally don't think the 1 bip is a material difference. All the way up to 150 basis points. Grayscale's GBTC, the Grayscale Bitcoin Trust, is 150 basis points. And we know the history of this fund. This has been around a long time. It had collected $25 billion in assets, predominantly from investors who bought it on their own, because there weren't very many investment advisors who offered it to clients. Either they didn't know about it, or they didn't understand it, or they didn't like it, or their compliance departments wouldn't allow it. So most of the money in GBTC is from ordinary individual investors. And that's fine. I was a big owner of that fund for years. Ever since it came out, I was an owner of it because, for all the reason everybody else was, it was an opportunity to buy Bitcoin in a fund, simple, convenient, easy, through a brokerage account. But it is now 150 basis points. And it is now an ETF alongside 9 others, including yours, at 20 basis points. What is that, 80% cheaper? I think a lot of the investors who own GBTC, who bought it on their own, have a financial advisor. They didn't get it from their advisor. They got it by themselves. Their advisor may not even know they own it. And they are not aware that A, their fund is still 150 basis points. B, that alternatives like BitB is available at 20 basis points. And so they're sitting on it. My contention is that everybody watching this video should call their clients this week and ask a simple question. Do you own GBTC? I'm convinced a lot of those clients are going to say yes. And the advisor can then say, are you aware that there's now an opportunity for you to sell that, move the assets to a fund that is 80% cheaper, and you own the same asset that you owned before? And oh, by the way, you can fold it into the portfolio I manage for you. So now I can do rebalancing and dollar cost averaging and tax loss harvesting. I'll handle the record keeping and tax reporting for you, just like I do the rest of the portfolio. And in the same time, you'll be saving all this money. In fact, the fee that I charge you as a financial advisor will be paid for by the savings of you moving from GBTC to BITB. I think it's a hell of an opportunity for advisors to capture new assets, improve service to clients, and oh, by the way, generate referrals from those clients, because if they own GBTC, they have friends who own it too, whose advisors are not telling them all the above. I think this represents one of the biggest business building opportunities that we've had in a long time.
I love that. I couldn't agree more, Rick. I think it's a huge opportunity, and those assets will be better managed within an advised situation. You'll have better behavioral guidance. You'll rebalance, as you mentioned. I think it's a huge business opportunity. I love it.
So what do you think, Matt, this is ultimately going to play out? I mean, we've talked about the hundreds of billions of dollars that we both believe these ETFs collectively will hold over time. But put it in a percentage for me. What percentage of the total Bitcoins are these ETFs going to end up holding? Are they going to be just another way people do it, or will they become dominant?
Oh, that's an interesting question. You know, they're still relatively small today. We're not talking about these ETFs holding 10% of the Bitcoin market, but I think they could get into the double digit arena. ETFs are an easy way to access this. They're cheaper than most other ways to approach it. I don't think they'll become the dominant approach because there are so many early investors in Bitcoin who are comfortable self-custodying Bitcoin, who that's core to what they do. So I don't suspect these vehicles will come to overwhelm that. But will they be double-digit percentages? Of course. Look, it's very similar to the stock market. I know I keep saying that these ETFs are just ETFs, but if you look at the stock market, do ETFs own the majority of the shares of individual companies? No. But are they significant holders? Absolutely, because they're convenient vehicles. And I think you'll see something similar in that space. Significant, but not dominant. Um, and I think they'll do a great job for investors.
Does it matter how much or what percentage of Bitcoin these ETFs hold?
It does not matter. It does not matter to me because it doesn't make a fundamental difference to the core thing about Bitcoin, which is you still have the ability to hold it in a self-sovereign format. You still have the ability to hold it without relying on any institution. The ETFs are just another way to do it. I'll make the analogy to the early days of the gold ETF. People said the same thing about gold ETFs. The whole thing about gold is you can hold physical gold without relying on an institution to do it. Why would you do it in a financial product? And a funny thing happened when the gold ETFs launched, which is, of course, they were very successful. They pulled in $100 billion of assets. Many people wanted to hold it in this convenient wrapper. But guess what? The number of people who wanted to hold physical gold bars grew as well. It didn't compete. It just grew the market of gold as an investable asset because it pushed it into the mainstream.
Hmm.
And I think that's what we'll see on Bitcoin as well. These Bitcoin ETFs will grow, so will centralized exchanges, and so will people who are using, their own wallet to hold it in a self-sovereign format. I literally think it's a rising tide lifts all boats sort of situation.
And is that rising tide Bitcoin centric, or is that going to be a rising tide as well for the rest of crypto?
Yeah, right now it's Bitcoin concentrated, but I think we've entered the ETF era of crypto in the US. I think maybe not immediately, but eventually we'll get Ethereum ETFs, maybe within the next year. I think if you pan out a few years, we're going to get ETFs on multiple different crypto assets. So, Bitcoin has often led the crypto market, right? It was the first crypto asset. They were the first regulated futures. This is the first ETF, but other assets have followed. I think this is a bigger story than Bitcoin, but the Bitcoin story is pretty big and it's just getting started, even by itself.
And I assume that we're going to see, we've already begun to see, frankly, the product extension. We've got 1x, 2x, 3x inverse funds. We've got futures funds. The Ethereum funds will eventually come, as you say. So I think this isn't the end of anything, right? It's just the start.
It's just the start. Covered call, momentum, volatility adjusted. You're going to see, if history is any guide, Bitcoin ETFs that only custody their assets, let's say in Switzerland or something. The ETF innovation machine will throw a lot of ideas on the wall, but it's important to note that these will be the biggest, right? What most people want is just exposure to Bitcoin. All this financialization, 2x, covered call, negative 2x, et cetera. Those are niche products that are built off of this anchor. This is the 10, 100 plus billion-dollar market is in these spot ETFs.
You mentioned that Bitcoin ETFs may eventually have double-digit allocation of the total Bitcoin universe, and that there are other ways to own it, and that you think it'll be a rising tide across the board. So put it in a qualitative perspective for us, Matt. Which is better, if that's a possible answer available? Is the ETF better than a MetaMask wallet versus a Coinbase account?
No, they're mostly all good. I mean, I think an ETF is better than most centralized brokerage accounts. I think your level of security, if you're comparing an ETF versus working with even the best centralized marketplace, the ETF is going to be a more secure and probably lower cost way for most investors to access it. right? More secure because these ETFs are holding the asset fully in cold storage, right? Not connected to the internet, whereas centralized exchanges maintain some hot wallet exposure and lower cost because these ETFs operate at institutional scale, right? That's the core promise of an ETF. Every investor gets to buy the same investment that the Harvard endowment would buy, right? At the same fee. That's the beauty of ETFs. So I think they're probably just better than most centralized exchanges. Having your own wallet is something completely different. I love, it's the core of Bitcoin, people who self-sovereignly hold Bitcoin themselves. And I think that's fantastic. It's just a choice. Do you have good security hygiene? Are you going to store your password appropriately? Are you prepared to pass it down to your heirs? Do you want that level of personal responsibility, or do you want to outsource it? I think both are great choices, and it just comes down to personal preference.
To that extent, one of the participants with us here today asked the question, if you're worried about a financial meltdown, is owning Bitcoin itself better than owning a Bitcoin ETF like BITB?
Yeah, I think if you're worried about an apocalypse, owning Bitcoin directly is probably better. The legal protections around these products and structures are pretty fantastic. But there are many people who want to hold 100% of the custody risk and 100% of the sort of platform risk to themselves, or who want the ability to sell Bitcoin on Saturday night. You can't do that with an ETF. So again, these are just different choices for different folks. The ETFs are sort of the easy button for accessing Bitcoin. Many people will want that. A lot of people are glad that they bought it since it launched. These more direct methods are the sort of more pure methods, and they come with more overhead. But for many people, that will be great as well. So it just depends on what you're looking for.
Yeah, I tend to kind of minimize the Armageddon worry. I know there are some people who buy it for the same reason they bury gold in the backyard. If we have such an Armageddon environment, I don't know how practical gold or Bitcoin are going to be. I don't know that you're going to be able to buy bread at all, let alone with these assets. So
Right.
I tend to focus more on the practical application and storage and access and safety of the custodian, et cetera. So I think we should be sticking to the real world as opposed to the hypothetical black swan what ifs.
Yep.
But another advisor asked, I think, a really good question here. I love this one. Is it good practice to own more than one of these ETFs?
Well, that comes down to individual preference. Our view is that the protectionary stack around these ETFs are extremely exceptional. Again, I mentioned regulated state trust chartered custodian, audits by KPMG. In the case of Bitwise, we publish our Bitcoin address so you can verify that we have it. I do know some investors who diversify their holdings between different providers. I'm not 100% clear the security advantages that provides, but I know that many people will like that idea. So I think that's a valid approach, but most people are just going to choose one. Look, ETFs are a tried and true and trusted structure. And many of the managers in this space have been managing Bitcoin exposure for multiple years, including Bitwise, again, 7 years. So I think people can feel comfortable with that. But if you want to hold two or three of them, I think that's great too.
I'm just looking at some of the questions that have been piling in.
Yeah.
One of the things that I think advisors are eventually going to realize, if they haven't already, or their clients, is that these ETFs, as cool as they are, as excited we are to have them, at the end of the day, it's just Bitcoin. It's a single asset ETF, which flies in the face of everything we believe in as advisors. We believe in diversification, and yet here it is, a single asset ETF. So talk about, and William has asked this question, talk about BitB, the Bitcoin ETF, against BitQ and BitW. So talk about
Sure.
all of
Yeah.
that.
These are three Bitwise products. Again, as you mentioned at the top, Bitwise wants to be, the crypto solution for advisors. So we offer products in every area that we're allowed to. BitB is our spot Bitcoin ETF. It holds Bitcoin, which is the largest crypto asset, about 50% of the overall crypto market, and is used primarily, in my view, as a digital store of value and potentially for other monetary uses, which is one major application of blockchain. BitQ is our crypto equity ETF, and it holds Bitcoin miners, it holds Coinbase, it holds asset managers, it holds Bitcoin mining equipment manufacturers, it holds the companies that are benefiting from the boom in crypto. And many advisors want exposure to those equities. You can think of it, some people make the analogy gold miners to gold, BitQ to BitB. That gets you in the ballpark. But there are entities that are building in the crypto ecosystem that are using the applications of crypto to build substantial differences and disrupt traditional finance. I would even add some entities that you may not think of, including firms like PayPal, which are building enormous stablecoin businesses and are really at the forefront of this. So BitQ allows you to package those together. And then BitW is our crypto index product. It holds the 10 largest crypto assets weighted by market capitalization and screened for risk. So you can think of it as the S&P 500 of crypto. That's how it's been described in the media. It's the largest crypto index fund in the world. So you own Bitcoin, you own Ethereum, you own Solana, on down through 10 assets. And the beauty of that product is what you said. We don't know how this blockchain revolution is going to turn out exactly. It may be that monetary applications like a digital version of gold are the biggest winner, or it may be that some other application like stable coins or decentralized social or decentralized compute, those are the bigger winners. What we know is that blockchain is a revolutionary new technology. Let's just bet on its being successful. And BitW allows you to do that. It's like buying a basket of internet companies in 1999 instead of just investing in pets.com. The difference with BitW is because the SEC won't allow us to have a multi-asset crypto spot ETF at the moment, it's an OTCQX traded trust, so it can trade to premiums and discounts. And currently it's trading at a substantial discount to net asset value. Some people dislike that because the discount can vary, and some people like it because it allows you to buy essentially Bitcoin exposure at only a portion of the cost. We find many investors put all of these together. They build a crypto sleeve, some BitB, some BitQ, some BitW. Other people want to make specific bets. Our role as an asset manager is just to build the best products we can, and that's what we've tried to do here.
Yeah, so rather than to the earlier question, should I own more than one of these Bitcoin ETFs? I would say that's redundant. That's like getting two different glasses of Coke. I would suggest you get a Coke, you get a beer, and you get a Scotch. Now you're talking diversification. So adding those three ETFs, you've got Bitcoin, you've got an index of the top 10 crypto coins, and you've got the stocks of the publicly traded companies that are in the crypto space. Now you're truly talking diversification, better than just buying one or two or three different Bitcoin ETFs. I think that makes a lot of sense. It's worth pointing out that BitW, the top 10 crypto index fund, is a market cap weighted fund. So Bitcoin is its largest holding, followed by Ethereum. The two of them together have what percentage of the total fund assets?
It's substantial. It's north of 80%, looking at it now.
And so, Bitcoin and Ethereum are the Coke and Pepsi of crypto. I mean, you can add, 7-Up if you feel like it, but you're not going to have the big impact in sales. So talk about your view. A couple of questions have come up here about this. What's your opinion, your attitude about Ethereum?
Oh, I think Ethereum is fantastic. I mean, it's important to note the difference between Bitcoin and Ethereum is the underlying blockchain of Ethereum can be programmed in an infinite number of ways. It can be programmed to act like the New York Stock Exchange. It can be programmed to act like Twitter. It can be programmed to act like a money market fund. It could be programmed to record the deed of who owns what piece of digital art. So you see more developers building on Ethereum and more quote unquote real world applications on Ethereum. It's also an asset that generates cash flows, right? The Ethereum blockchain generates billions of dollars of revenue, which is used to buy back Ethereum in the same way companies generate revenues and buy back their stocks. The Ethereum blockchain generates revenues and buys back its applications. I think there's some killer apps in the Ethereum ecosystem. For one, stablecoins, which are digital representations of the dollar that move at the speed of light, are built on Ethereum. They put a US bank account in the hands of anyone with a cell phone, anyone around the world. I think that will be $1 trillion plus market. And that's built on blockchains like Ethereum. So I'm very bullish on Ethereum. I'm also very bullish on Bitcoin. Again, I go back to this perspective. These are disruptive innovations going after multi-trillion-dollar markets. I know we think it's a big deal that, Bitcoin is a $1.3 trillion asset, but it's going after a 15, 20, $30 trillion market. I know we think it's a big deal that Ethereum is $400 billion, but it's potentially putting a US bank account in the hands of every American or every person around the world. That's a multi-trillion dollar market. In these disruptive early stage markets, it's really hard to know how it will turn out. And a market cap weighted index is the only way that you have to bet the field, to own Bitcoin, to own Ethereum, and also to own upstarts like Solana, right? It's the equivalent to owning Coke and Pepsi, but not ignoring Monster and Red Bull and all these new innovations. You can own them all in one package and let the market decide.
We've got a bunch of tax questions. I know you love tax questions. First of all, Bill asks, unrelated, where can we find Matt's CFA guide to crypto?
Oh, sure. You can Google it, or you can ask us at Bitwise. I'm sure Rick will send out that information.
Yeah, we will be sure you get all that. We'll put a thing in the link right now to the web address so you can get that really easily. Jim's got a really good question. If somebody owns Bitcoin, they bought it at Coinbase or they got it in some crypto wallet and they've bought it a long time ago, they've got big capital gains in it, can they move their current Bitcoin into your ETF in-kind transfer so they don't have to sell it and incur the tax liability?
Yeah, I would say consult with your tax advisor or give us a call at Bitwise. It's both not easy and potentially not impossible, but we have seen people who are working on that exact problem. So give us a ring. We would love to discuss it with you.
A couple of related questions to my comments about GBTC, noting that a lot of the people who own it have those long-term capital gains. My first reaction is, number one, I'll bet a whole lot of those people have it inside their IRA. That makes life simple. But even if there is a capital gain to sell GBTC and buy BITB, they're going to pay the tax sooner or later anyway, unless they're going to die owning it. They're going to never let the tax tail wag the money dog, is the short answer. Every year they own GBTC, they're paying 130 basis points more than they have to. So do the math, do the calculation, have an open conversation with your client, do what's in their best interest. You'll figure it out. Any alternative answer you have to that, Matt?
I love that, Rick. I love that. Just perfect.
Somebody asked, are the ETF fees ever going to go up?
Great question. It's very hard for ETF fees to go up. You can never say never categorically in an asset class. Who knows what individual entities will do, but we have no plans to do that here at Bitwise. It is the case that many of these ETFs launched with fee waivers that are either going to expire or are already exceeded. So in the example of BITB, we had a fee waiver to zero for the first $1 billion of assets, but we're over $1 billion now. So there is some level of fee. That's true for most of the successful ETFs. But, historically, if you look at the history of ETFs, it's a rare ETF that has historically raised its fees. Not saying it's impossible, but it doesn't happen very often.
Ben thanks you for disclosing your Bitcoin address publicly. He wonders whether you think others will do the same, other sponsors.
Man, I sure hope so.
I'm a little surprised nobody has yet.
I'm surprised as well. There is no security risk to doing it, and it's just strictly better. I think it's important that we recognize that there are things that the traditional finance industry does exceptionally well that the Bitcoin and crypto market can learn from. And there are things that crypto just does better than the traditional finance industry, and they can learn from it as well. It's great that we have auditors. As mentioned, we use KPMG, one of the top auditors in the world, but people like to verify for themselves. So why not just show that you can hold where you hold Bitcoin so people can check? I'm surprised more people haven't followed our lead. I would add, we also donate 10% of our proceeds to Bitcoin core developers, right? We pay back in to the Bitcoin community. I'm surprised more of the ETFs haven't followed that lead as well. There is one other issuer, Van Eck, who also makes a donation from the profits of their ETF. But yeah, I think some of these new people coming into the crypto market would do well to adopt these crypto native practices.
And in fact, that's a question that Ed has asked is why did Bitwise decide to make this contribution? It's 10% of the revenues, I believe, correct?
10% of the gross profits of the Bitcoin ETF. And the reason is, Bitcoin is a decentralized entity and it's maintained by developers who subsist on grants or volunteer their time. And this system is extremely robust. It's been working for 15 years. It works in other open source software. Essentially, all of the software that powers the internet, is Linux-based, which is maintained in the same system. But it needs people to contribute to allow these developers to live and still work hard on the Bitcoin market. We didn't want to build an ETF that just rides on top of their effort for free and benefits from it without contributing backwards. And so we saw the opportunity to create a funding mechanism for these Bitcoin core devs. And we're very pleased that it's 10% of our gross profits for at least the first 10 years of the fund. And I wouldn't be surprised, beyond that as well. So we're proud of that donation program. It goes to 3 different nonprofit entities that funnel it to the developers. And again, I hope these other ETFs follow our lead there.
In the conversation we had earlier of diversification, different ways to access, Gary's asking, how about MicroStrategy? Is that a candidate for additional diversification?
Yeah, we love MicroStrategy. We own it in BITQ in our crypto equity ETF. We own it along with Coinbase and Galaxy and other leaders in that market. So it's an operating company. It has some financial leverage. It has a different relationship with the price of Bitcoin. But Michael Saylor is an incredible leader there, and it's an incredible company, and we're proud to own it in BITQ.
Timothy wants to turn that fee question upside down. Instead of asking whether the fee is going to go up, he wants to know if the fee is going to go lower.
Again, you never know. Never say never, right? Look at fees in the ETF space. They do tend to move lower over time. There was an extreme fee war at this launch. You mentioned that this was a unique launch with 10 companies launching at the same time. So we saw much of that fee compression embedded in that first launch. Worth noting that BITB is half the cost of GLD, which is a gold ETF that's been around for a very long time. But over time, it's not impossible as we start to see these things continue to get this kind of scale that they're getting.
One big thing we didn't talk about here, Tim is calling us on it. We didn't talk about how much to put into the portfolio. He knows that I've talked often about a 1% allocation. You've done a lot of research on this question. What is the proper allocation of Bitcoin into a portfolio?
Yeah, we've written a white paper on this called Bitcoin in an Institutional Portfolio. Happy to get that link. For us, we talk to most folks about a 1 to 5% allocation. And the reason for that is below 1%, it's not that it doesn't influence your portfolio. It's just a lot for an advisor to keep track of. Sub-percentage allocations are rare. When you get above 5%, you start seeing it increase the maximum drawdown of your portfolio. It becomes the dominant driver of that. Between 1 and 5%, historically, you're looking at an asset that substantially increases your absolute and risk-adjusted returns, increases your Sharpe ratio without introducing that sort of excess volatility that you start to see above that 5% level. Look, plenty of people own more than 5%. I know I do. But for most investors, you don't want to see that excess volatility. And we think that 1 to 5% range is a pretty sweet spot for this asset right now.
Michael's getting a question from several of his clients and wants your comments, Matt. The threat of quantum computing on blockchains.
Yeah, absolutely. So the core cryptography that underlies crypto relies on public-private key cryptography, RSA cryptography. And the challenge of quantum computing is that this cryptography is sort of secured by the presence of large numbers. The way you would break it is you would guess a lot of large numbers, but the numbers are so big that it will never naturally be broken with traditional computing because it's just too rare. It's like finding one grain of sand somewhere around the world. It can't happen. The risk of quantum is, of course, that you could theoretically, if it matured, guess all the numbers at the same time and therefore break the code. I don't worry about it, even though it's a good question, because this exact same cryptographic method underlies all military communications, every point of sale transaction that you make, how the internet works. It underlies this webinar that we're working on. It's the key to everything. And so if quantum computing broke this, again, the Bitcoin ecosystem breaking would not be your first concern.
Right.
The solution to this, and people are working on it, is quantum resistant cryptography. And I suspect over the next 5, 10, 15, 20 years, you'll see that embedded in military communications and point of sale transactions, in the internet, and in Bitcoin.
Yeah, if they can create a software to crack the code, then they can create software to protect the code.
That's right. Well said.
And again, goes into the catastrophizing bias that people suffer from. Let's worry about things that matter, as opposed to things that are just not terribly likely or certainly not soon. What about, with several questions on this point, is the flow of money going into these ETFs likely, and as a result, not just flow of money, but a great large number of people, first-time investors into Bitcoin itself, is this going to likely reduce Bitcoin's volatility?
Yeah. Look, Bitcoin's volatility is not going away. This is still an early stage asset. I expect it to be volatile. It's volatile today, right? We were at 69, then we were at 64. It's a volatile asset. But I do think on the margin, Bitcoin's volatility is going to go down as it's been going down historically over time. And the reason is you're introducing new types of investors who invest for different reasons with different time horizons. And importantly, you're introducing more professional investors who rebalance, who DCA, who invest every year, who put it as part of their retirement portfolio. And that sort of persistent investing and that sort of rebalancing frequency should dampen down volatility. So I suspect it will be lower over the next 5 years than it was over the previous 5, but it's still going to be plenty volatile. It's still an early asset.
Ken wants you to make a prediction. End of 2024, what do you think Bitcoin's price will be?
Oh man, put me on the spot, Ken. You know, in December, when Bitcoin was $40,000, we put out our 2024 predictions. And our prediction at that time was that Bitcoin would trade to a new all-time high over $80,000 in 2024. I now think that that is too low. If I were forced to make a prediction today, I would say I think it will crest $100,000 this year, and it may be substantially higher than that. The level of demand for these ETFs has exceeded even my bullish expectations. And as mentioned, I expect it to persist and maybe even accelerate in Q2. And to me, that means 6-digit Bitcoin. That's not a guarantee. There's always risk. It's hugely volatile. There could be major pullbacks. But I think 6-digit Bitcoin is going to be something we see this year.
And I haven't made a prediction about 24, but I have about 25, and I believe we'll see 150,000 by the end of 2025. I think we're just getting started. This is a very exciting environment. And it's evidenced by the extremely large number of people who have joined us on this conversation here today, Matt. There's a huge level of interest, and rightly so. Many advisors, frankly, are behind the curve. They don't know a lot about Bitcoin. They don't know a lot about blockchain or digital assets technology. They're unfamiliar with how these ETFs work. And yet, with the ready availability, the advisors realize that they have to be able to get competent on this quick because your clients are demanding this info. There's really no better organization that I can think of than Bitwise Asset Management because of their deep breadth and the incredible level of service that they provide. You have how many professionals around the country directly serving advisors?
Yeah, well north of 20 in the field in every region of the country, there to help you answer those questions.
And we will get you that link as well so that you can access your local Bitwise wholesaler in your community so that you can get all your questions answered and learn how to begin to incorporate this into client portfolios. Matt, I'm so very grateful for your time here as always. What I want to tell you about is our next webinar coming up, which is just in a couple of weeks, how to factor longevity into your financial planning. We're going to be talking with Nate Conrad, the head of LifeX. That is March 21st at 2 p.m. This coming week, however, March 10 to 12, we have our wealth management convergence. And Matt, you'll be there. You just can't get rid of me. It's a good thing that you like me because at least I hope you do. You'll be sick of me by the time this is all over. March 10 to 12 in West Palm Beach. This is not a crypto conference. This is a broad-based conference on the big topics that matter to advisors right now: longevity, AI, estate planning, college planning, of course, a lot of investment management. Matt's doing one of the only crypto sessions at the event. I encourage you to register right now so we can see you in West Palm Beach. We've created a complete spot Bitcoin ETF toolkit for financial advisors that, among other things, has this cool little grid allowing you to easily compare all the ETFs together. That is free and available to you. And most importantly, to get the knowledge you need to become certified in blockchain and digital assets. Get your CBDA. This is listed in FINRA's database of professional designations. You get 18 CE credits. First half of the course, all about the tech. The second half of the course, all about practice management and how you can incorporate this simply, easily, and quickly. 5 different tracks, depending on your role in the industry, including it's now available in 9 languages because we've got folks from 37 countries who have gone through our course. Bitwise, you guys make it a mandatory for all your employees.
That's right. Yeah, it's a phenomenal course. I can provide that that endorsement. We do make it mandatory for all our sales employees so that they're fully trained. There's nowhere better to do it than at DACFP.
I appreciate that, Matt. And our big event of the year is Vision, which is June 2 to 4. Matt will again be there. This is a crypto conference. It's the longest running crypto conference exclusively for financial advisors. 2.5 days, deep dive of the latest going on in the world of crypto, regulation, taxation, what's happening in legislation on Capitol Hill, along with the latest product innovations, technological developments, and everything else. It's a really cool event, and I encourage you to go to that. And tune into my daily podcast. We cover crypto and a whole lot more. You can get this, The Truth About Your Future with Rick Edelman, everywhere that you get your podcasts. And be sure to read my #1 Amazon bestseller, The Truth About Crypto, named Business Book of the Year when it came out. Thanks so much for joining us today. I'm easy to reach. If you've got any questions, Matt's easy to reach. We'll make sure you have the ability to get in touch with him. This has been terrific. Thank you so much for joining us. Matt, always a pleasure, my friend. And I look forward to spending time with you again before too long. Have a great day, everybody. Thanks again for joining us.
Thanks, everyone.